Hi everyone, I just put up our day 11 of our 90 Days to Taxes series where I am taking new business owners or business owners who aren't organized. I'm helping you get organized, helping you get ready for tax season. So today was all about claiming your vehicle in your business. What does that look like? How do we write off those vehicles? There's generally two separate ways that we can do this. One is the standard mileage rate, and the second is actual expenses. So when it comes to the standard mileage rate, we look at the number of miles that we've driven the vehicle for business use, okay? And then we multiply that by the standard rate for the year that the IRS sets. Every year, the IRS sets a different amount of cents per mile that you get to deduct. For 2025, it is 70 cents. 2026 will look different. So we can take those business miles in 2025, multiply it by 70 cents, and that's our write-off. Alternatively, we can take actual expenses where we tally up all the actual expenses for that vehicle. We look at fuel, licenses, registration, repairs and maintenance, tires, oil changes, all that good stuff. We also get to include depreciation. So if you want to know more about depreciation, make sure you check out the video that is attached to this short. It will give you more information on that. And then we look to see what percentage of the miles put on that vehicle were business. So instead of, say, multiplying 1,000 business miles by 70 cents, we're going to say, okay, we drove this vehicle 1,000 miles for business, 10,000 miles total, which means 10% of the miles on this vehicle are business use. Because of that, we can take 10% of our actual expenses. If our actual expenses are, $15,000, we get to take $1,500 in a deduction because that's 10% of 15,000. Okay. So which one generally gives you more? It just really depends on your vehicle. If you have an expensive vehicle or a vehicle that requires a lot of repairs, a lot of fuel, actual may get you more, but sometimes and oftentimes we see standard get our clients more. There are certain circumstances where you are stuck using one method or the other. So make sure that you pay attention before you pick a method. Go ahead and do your research, but in general, you have to keep mileage logs regardless of which method you're using. The way that you write off these expenses is also going to be determined by the way your business is taxed. If you want a little bit more information, go ahead and take a peek at the video that I've linked to this short, and you'll get some additional info. I will see you guys tomorrow.